So while we're waiting for a couple more people to join, I wanted to go over some of the ADA rewards statistics for the pool for the past few epochs. So if you go to adapools.org and you go in the search here and you type LEGA, that's the ticker for our pool. So you can have a pool name, which is LEGA Systems for us, and then you have this 4 or 5 or 3 character ticker, as they call it. So you can search by that on Cardano blockchain or any explorer, and then you'll find our pool. And then there are some stats here that you can review, and these get updated every epoch, so every 5 days. So our return on investment annualized in the past 30 days was 5.7%. Lifetime is 3.57. This is a live stake and active stake. So live stake is any ADA that's delegated to the pool. It may or may not be participating in the delegation cycle, but active stake right here, 4.243 million ADA is what's participating in the current epoch. So the rewards will be paid based on this amount. Pledge is what the stake pool operator pledges to keep the pool running. And if we, so we pledge 317,000 ADA. If we take any of this money out, then the pool stops working. So that's how public pools work. And then margin is 2%. These figures are always the same, 2%, and fixed cost is 340. So out of any 100 ADA that you receive in your rewards, the pool keeps 2. So the pool keeps 2%. And the new epoch number 312 started yesterday. So far we have 0 blocks. But if you go to historical, if you click on blocks, then you can see what blocks were minted here and on what date. And this is the number of transactions that were here. And you can look at the hash and the blockchain. If you go to rewards, then here are the payouts that the pool received. So this is the 312 is the previous epoch, and the return of ADA was 4.73% annualized. So on adapools.org, you can see that the number right away because it's getting estimated, but you can look at the previous epoch, and so that this goes back 5 more days, and there we had 3.93% ADA return annualized, and it will show you the amount here, how much the pool made, how much the delegators made, and then you can look at that for every epoch. So the one before that, we got lucky and we had 8 blocks. So the more blocks that we mint, and the more ADA we receive in rewards, and therefore we have a higher rewards percentage annualized. So when we had 8 blocks, then we had the pool made 440, and then the delegators made of 4,900. So that's how you can look at what the pool made. And if you're looking for your own rewards, if you click on delegators here, you can search either by when they started to stake or by amount. You can sort this by amount from smaller to larger, or vice versa, from large to smaller. So you can click, I'm going to click randomly on something, as I don't know who these delegators are. I'm going to click on some rewards address at random. And if I click on it, then it will give me a breakdown. So this person with 14,922 ADA, these were their rewards. So when we had 4 blocks, they got 8 ADA, and we had 8 blocks, they got 17. So that's paid in ADA, and that's paid every 5 days. So that's what, if you're looking, I have many questions by email and on social media. How do I find out how much money I made or how much ADA rewards I made? So this is how you do it. You go here either on ADA pools, or you can use another blockchain explorer, and you go to delegators and you find your address here. So this address will be in your Daedalus or your Yoroi or ADA Lite wallet, or you can look at the amount. You should know what amount you have of ADA, and then you can search here by amount and click on your address, and it will take you to this page where it will have a breakdown like this by epoch and what reward you received. So questions on this or the pool rewards? You can go here. There are other sites that other people may like more. There's this one pool.pm. This one has like a real-time tracking for pool data. So you can see every time somebody adds ADA to the pool, or every time we mint a block, if you scroll down here, it will show you in live mode on pool.pm what's been happening. And if you go, there's another tool called Pool Tool, and it has we have our address there. All of the links here are on our website, and I'll show you how to get here. So on Pool Tool, you can actually see, if you go to Delegators and you click on any right here in the arrow, and I'm randomly keep clicking on somebody's rewards address, you can see what their active stake was, what were the rewards total, and what was the reward rate and return of ADA. So you can, for your own delegated address, you can look this up here on pooltool.io. And if you need to find links how to get here, if you go to our website, stakemyada.net, in about staking, we have useful links. So if you click here, you can get to our page on LinkedIn. Please follow YouTube. Please subscribe. And then here's the ADA pools page link, and pooltool.io, the one that I just looked at, that's this one. The link is here. So this is how to find out what your own rewards were. There's also a calculator, Cardano staking calculator. If you haven't seen it, we put a link for it here. You can scroll down here and you can calculate how much you can get in reward. So you can either delegate my own stake or run a stake pool, and you can put the amount of ADA that you have, and it will give you kind of the growth over time, how many epochs, and what percentage you can expect to earn. So any questions on that? If not, I'll start. So I have a few interesting slides this time. I have some. So this is the agenda. I wanted to cover something in the Bitcoin market, that what's been happening recently with the current bull cycle that we're in. Some information and statistics about Kazakhstan. You might have heard in the news lately about Kazakhstan and what's been happening there. Let's see. Okay, I thought I had a question. Cardano year in review. We have some Cardano statistics for the year. Some of the monetary properties and user growth. We've hit 1 million delegated wallets on the Cardano blockchain. So I have some information about that. And then some basic info, where to buy, how to stake, performance we already gone over. So I want to start by talking about inflation and supply of US dollars. So I've been covering this subject for the past few meetings because I think it's important. Everyone is looking for some hedge to the dollar printing and expansion of the monetary supply. So this is yearly data from the beginning of the last century on inflation versus deflation. So like in the red candles going down, you can see that right after World War I and during the Great Depression, we actually had deflation. And then we had high inflation in the 70s and 80s, upwards of 12, 15%. And then it's been low for a while until we hit this. So like in January 2021, we were at 1.4%, and we've gone up as high as 6.8%. So that means everything is getting more expensive. If you have some savings and they're sitting in your bank account, they're probably not making much money for you. So you may be thinking about where to store that wealth so that you can accumulate it and receive some rewards on it. And CDs and savings accounts are probably not paying much right now. It would be less than 1% because the federal funds rate is close to zero now. So we're at 6.8% inflation, and here's why. This is our monetary printing supply. So we're accelerating in the money printing. The United States government printed something like $3 trillion in the past year, and I think that this trend will accelerate. If you look at the 2012 budget, we've had tax revenues of $3.4 trillion, mandatory spending. This is what the government has already committed to. 4.6 trillion, 1.6 discretionary, and then it's overall close to 6.6 trillion. So with the revenues of 3.4 trillion, we're printing roughly 50 cents or 48 cents of every dollar that is spent by the federal government. So as the monetary supply gets expanded, we see inflation because that money is seeping into the markets, and people are spending it to buy whatever necessities that they need, or beating up real estate, beating up some assets. So overall, this is what our finances look like. The green is our revenue, which has gone down last year. Deficit has gone up, and our debt is growing at an increasing rate. So we're about to breach $30 trillion in the United States dollars denomination in just federal debt, and that doesn't account for all the states. So you can see here what the in live mode. So we're about to breach $30 trillion in national debt, and then you can actually see here what's in Social Security, what's for defense spending, interest on debt, and then you can go to state by state, and you can click on any state. So like I live in Massachusetts. So if I click here, then this will tell me so Massachusetts is approaching $100 billion in debt. So there you go. You can explore this on your own later if you haven't seen this site before. So this is the projected deficit by 2031. So these are the current deficits and projected. So this is from Congressional Budget Office. So we've just hit just over 3 trillion. They're projecting that the deficit will go down to about 1 trillion, but I am personally not buying it. I don't see how this could happen. But then they're projecting that it will keep climbing in the 2020s and 2030s. So the message here, this is also from Congressional Budget Office. This is the projected debt to GDP ratio. So right now we're at about 100%. So the US GDP is at 30 trillion and the debt is approaching 30 trillion. And the debt to GDP ratio is projected to hit close to 200% by year 2050. So it's going to accelerate. So the message here is holding US dollars is probably not a good way to save your earnings or your savings, and many people are looking for alternatives, and cryptocurrencies are some of them. This is Bitcoin in price and inflation rate over its existence. So somewhere, or when it was being tracked, it was here in 2010. It was less than $1, and right now we're here. So this is a logarithmic scale. So for every two of these lines, it goes $1. Here's 110,000, and we're just here getting close to $100,000. So when it crosses this bar here, which I'm sure it will cross $100,000 per Bitcoin. So Bitcoin is the hardest asset on earth right now. And this is an updated from Rational Root. He is he's an analyst who makes these charts comparing current Bitcoin cycle to previous cycles. So the cycles are based on every 4 years the halvening or the 50% cut in block rewards. So this purple line here is where we are right now, and orange is the previous cycle in 2015, 2018 bull market. The brown one up here, this is the 2011, 2015. So it looks like the cycles are expanding. So we're somewhere midway from the peak to the trough. So we still haven't, according to his analysis, we haven't still have not made it to the peak of this cycle, which I actually agree with. And this is not another chart of his. So like the slope of the market cycles is going down and leveling off. So with every cycle, the cycle is getting longer, and the returns are diminishing because the market is getting bigger. More people are finding out about Bitcoin and other cryptocurrencies, and it takes more capital and more money to move the markets both upwards and down. So if you don't follow him on Twitter, I suggest the rational root is his handle right here at the rational root. He makes some cool charts. And here's another one. This is where we are right now. We're approximately at 43,000, and this pattern looks very similar to what we had in between 2019 and 2020. So we've come up in July of 2019. If you recall, this was around the time when Mark Zuckerberg went to Congress and Facebook announced that they were working on their own Libra cryptocurrency, which then got pretty much either delayed or de-emphasized, I should say. And then we had the 2020 crash down here to about 3,800 USD per Bitcoin during the coronavirus crash, and then it came up here. And then we're in a similar pattern now where we're testing this bottom here at 43,000. And this is from Wyckoff mode. So he made an observation that yesterday when there was news from Kazakhstan, and we'll talk about Kazakhstan a bit, Bitcoin actually fell to 39,600. So what happened, if you haven't heard, in the spring of 2021, China announced that they were shutting down Bitcoin mining in China, and miners went to other countries. Most of them went to the United States. Some of them went to Kazakhstan. So Kazakhstan became the second largest country with Bitcoin miners by hash rate. And yesterday, there was a attempted, there were protests and an attempted coup in Kazakhstan over energy prices, and the government shut down all internet traffic, including, of course, Bitcoin mining. So I want to go to that real quick. I'll come back to this slide, but in 2019, in September, China had 75% of Bitcoin mining, and right now it's coming down close to zero. So some other players are United States was at around 4% in 2019. Now United States is up to 35%. So that's the share of US based Bitcoin miners, and Kazakhstan was number 2 at 18.1%. So when their internet got turned off, it freaked out a lot of people, and the price plummeted. The Bitcoin hash rate will recover. But if you want to know where Kazakhstan is, it's a former Soviet republic, former republic of the Soviet Union. It's somewhere here in the Central Asia. So it's right between China and Europe. And one of the reasons why many Bitcoin miners went there is because electricity is cheap and it's close to China, so it was easier to transport um, their mining machines than to United States or other countries. So um, approximately half of the miners that left China went to Kazakhstan, and 40% of world's uranium supply comes from Kazakhstan. They also have a large supply of copper, chromium, gold, and but their population is only about it's like 16 million. So it's not a huge country by population, but it's the was the second biggest republic of the Soviet Union after Russia. So land wise, it's pretty big. So next, I want to jump into Bitcoin versus Cardano. Since this is a Cardano delegators call, I wanted to provide some information for some of the new people, as I know we have some new delegators or potential delegators, or just folks that are new to the um, cryptocurrency space and proof of stake space. So ADA is proof of stake, Cardano is proof of stake, Bitcoin is proof of work. The maximum supply for Bitcoin is 21 million, and we just crossed the threshold where 90% of all Bitcoin that will ever exist have been mined. So there's only Bitcoin has been around for since 2019. So since 2009, sorry, so 13 years or close to 13 years, but already 90% of the supply has been mined. So there's only 10% left. Um, Cardano has much lower fees. There is a set inflation rate based on epoch turnover, and I will demonstrate how that works. The fees on the Cardano blockchain are much smaller. It uses a lot less energy. So one of the issues that many people have with Bitcoin is that it burns a lot of electricity, and it uses amounts similar to some um, smaller and mid-sized countries. Um, so Cardano is energy efficient and it uses a fraction of that electricity. There's a governance component built into Cardano, which Bitcoin does not have. Cardano is a smart contracts platform, and Bitcoin has become a digital currency and a store of wealth for many. So there's also support for NFTs on the Cardano blockchain, which Bitcoin doesn't have. And some of the recent developments on Cardano, um, we now have a Ethereum virtual machine available on Cardano, so developers can port their applications from Ethereum to Cardano, which will be huge. So what are the differences between proof of stake and proof of work? So with proof of work protocols such as Bitcoin, the profitability of mining goes up as more electricity and more equipment is used. So they're using ASCII miners to mine Bitcoin. With Cardano and proof of stake, the more of some asset that you have, the more you're able to mine. So having ADA, which is the native cryptocurrency of Cardano, gives you a right to process transactions, validate transactions, and for that, you have a right to participate in a slottery. And when you participate in a slottery, when you mint blocks, you receive the rewards for those blocks. So the more ADA you have, the more you can mine with proof of stake. The profitability of mining increases for proof of stake with additional assets. So the more ADA that you have, or the more ADA is delegated to a pool, the more transactions the pool can process, and the more times it can participate in this lottery. With proof of work with Bitcoin, the probability of mining a block is dependent on how many ASCII miners you're running. So how much electricity you're using, and how many machines you have for the mining. So there's something called a 51% attack, which is a double spend attack. If an attacker on the Bitcoin blockchain can produce more than 51% of the hash rate, then that attacker can rewrite transactions and double spend Bitcoin. So it's highly unlikely, but it's possible. It has happened to other blockchains, like Ethereum Classic had that issue a few times. With a proof of stake, it's extremely difficult because right now 71% of ADA is staked. So someone would have to buy on the market or acquire more than 50% of ADA in order to conduct this type of attack, which is highly improbable. Proof of stake is decentralized, though Cardano is the most decentralized blockchain protocol. Right now, we have more than 3,100 stake pool operators. So those are transaction validators, and they're scattered around the world. So it's more decentralized than any other platform by far. Proof of work becomes more centralized over time because those who have the equipment and they produce the Bitcoin, they can sell that and buy more equipment. So the more equipment they buy and the more access they have to electricity, they can mine more, and it's becoming more centralized. So there are a few large players in the Bitcoin mining world, where with Cardano we have more than 3,000 stake pools. And the impact on the environment, of course, the electricity used by Cardano is far smaller footprint than that used by Bitcoin. Any questions on this? So next slide I have is I put this together, and this was ADAnomics. I write articles on ADAnomics, basically the economics of staking and proof of stake on Cardano. So this is the difference between 2021 January 1st and 2022 January 1st. We had the 200,000 wallets with ADA balance. In January 21, we have 2.6 million wallets with balance. So delegated wallets is where you actually have a delegator that's delegating their stake to a pool. So we had 112,000 of those in January of last year, and now we have over 1 million. I looked today, and it was actually like 1,050,000 delegated wallets. So that number is growing. Average ADA stake per delegated wallet, we had 191, and I guess I'm missing a number, but we can look it up together. Was 1,112 stake pools a year ago. Now we have a 3,000. I looked today; it was over 3,000. It was like 3,100. 21.5 billion ADA stake. That's 67%. A year ago, now we have 23.6 billion. That's 71%. We were growing at 1,400 wallets per day. Today, it's 4,900 wallets roughly per day. So that's new wallets that are being installed. So they're reporting back that they've been installed. So the rate of growth of the user base is accelerating as well. Percentage of wallets staking. So we had 55% a year ago. Now we have 37, and that plays with this number with wallets with ADA balance, and then wallets without, and then wallets that are delegating. So less than half of the wallets are actually delegating, and that's sad to see because if you own ADA, you have a right to stake your ADA and receive rewards for that. And if you're not doing it, then you're giving that money to somebody else. The circulating supply was 31.81 billion. Right now we're at 33.1 billion. And a year ago in January, the price was 17 cents. And today we're roughly at 130. It was 136 yesterday when I was putting the slide together a couple of days ago, but we're roughly at 130, maybe 125 today with this Kazakhstan news. But we're at 2% market cap. So ADA has a 2% market cap. So any questions on this slide? Okay. So this came out recently from Sandbase. This is a developer activity or the most active blockchains today. So Cardano in 2021 was in #1 place, and then Kusama, Polkadot, Ethereum. Ethereum came in #4 in commits. So this is a development activity, and Cardano is open source blockchain. So when application developers write something for this blockchain, they put it in GitHub, so it becomes available to the public. So you can see how many people are actually developing on Cardano and building on Cardano, and it's #1 blockchain by development and GitHub commits. So some of the basic terms, the maximum supply for ADA is 45 billion. We're at 33.5 billion roughly right now in circulation. So when the rewards come from the reserves and from transaction fees. So it's 25% transaction fees, 75% from reserves. So the reserves are slowly moving into the circulating supply, and this happens every 5 days. So it's important to know that ADA has a set limited supply, which has 100+ years to remaining to be added from the reserves into circulating supply, but there is a set maximum. So like Bitcoin is set at 21 million, and ADA is 45 billion. And why 45 billion? Because that's just a number that came up when the blockchain was developed. Some of the basic terms for those who are new and just joining us for the first time. So ADA staking rewards, they're newly minted ADA cryptocurrency that are paid out to delegators, and when they're paid out, they're moved from the reserves into the circulating supply. The reserves are just the allocated ADA cryptocurrency coins that have not yet been minted, and they have not entered circulation. So every 5 days during epoch turnover, some ADA moves from the reserves into circulating supply. So that's where those payouts are coming from. 75% from reserves, 25% from transaction fees. Delegator is someone who grants the authority to mint ADA on their behalf to a stake pool operator. So as owner of ADA, you are entitled to receive rewards, and you can do it in 2 ways. One, you can run your own stake pool, and you can delegate your own ADA to your own pool through the pledge wallet. And then the second way is if you don't want to run your own servers to process transactions, then you delegate through a Yoroi, Daedalus, or ADA Lite wallet, and you delegate it to a pool. So stake pool is the transaction validator that produces blocks, receives rewards, and then based on the rewards that the pool received, the delegators get a payout from the blockchain. So the stake pool operator is someone like me who runs computers that validate transactions on the blockchain and make blocks. And then based on the blocks that are made, the rewards are received. Epoch is a computing um, slot of time which equals 5 days, and it's always 5 days. And every 5 days, there is a certain amount of ADA that's moved from reserves into circulating supply, and the delegators get paid. Slaughter is the random process of assigning stake pool leader role to stake pool operator or the pool and the pool. So when the pool becomes slot leader, then they are completing transactions that are required to mint the block, and when the block is minted, they receive rewards. The block records transactions and just a batch of transactions. You can see them on the blockchain explorer. So any questions on the terms here? Okay. So what's Cardano and what's staking? In basic terms, Cardano is a delegated proof of stake blockchain. The holders of the currency ADA have a right to earn rewards by delegating their ADA to a stake pool. And those rewards are minted, they're moved from reserves into circulating supply. I get this question all the time from current delegators or prospective delegators where those rewards are coming from. So they come from reserves. Do you have to participate in staking? No. But if you own ADA and you don't participate, then you're leaving money on the table and someone else is receiving your rewards. Because the ADA that's moved from reserves into the circulating supply, it's divided among stake pools and delegators based on how many blocks they have minted, and they mint those blocks based on how much ADA they have staked. So if you don't stake your ADA, then you're not participating in the proof of stake um, delegation model, and someone else who is participating is receiving your rewards. Um, So like I was saying, they come from two sources, 25% from transaction fees, 75% from reserves, and that's your reward. And then where does that money go? There's a treasury, there's a Cardano treasury. 25% goes into the treasury, 75% go into, they go to stake pools and delegators. The treasury then holds those funds and it pays out those who win in contest called Catalyst, where you can submit your development project on the Cardano blockchain. It could be a decentralized application, it could be something else, but you submit your proposal through the Catalyst, and then delegators vote. Or if you have ADA, there's a Catalyst app available in Apple and Google Play you can install, and you can vote for specific projects. So if somebody votes for your project that you have submitted through Catalyst, that ADA from the treasury goes to pay you to build that project. So if you're a developer and you want to build something Cardano, look into the Catalyst. So this is from ADAnomics. I have some updated stats. So we've hit below 2% inflation on the Cardano blockchain. So below 2% inflation of ADA. So what does that mean? um, in ADA, inflation is when ADA is moved from reserves into circulating supply. It's moving at a rate, and if you multiply the reserves by 0.003%, that's your payout per epoch. So every epoch, the 12 billion ADA that's in the reserve is multiplied by that number, 0.0003 percent, and that's your epoch reward that comes from the reserves, the 75% that comes from the reserves. So this means that the reserves are shrinking, and this inflation percentage is also shrinking. So as we go along, there's a constant reduction in payouts of rewards, while we have more people that are installing wallets and joining the blockchain. So if you're good at math or at logic, you can figure out what that's going to do to the price eventually. So right now we're just hitting 75% supply that's been minted, and I wrote an article on this on the rewards and reserves last year. So this is the breakdown of what rewards will look like for Cardano in the coming years. So in 21, 3.3 billion were paid out. In this year, 22, 2.5 will be paid out. And then you can see that this number is dropping sharply. So as fewer rewards are paid out, the circulation is growing at a slower pace. And as you had more people that are joining participation in the blockchain, and the inflation is decreasing, the circulation growth is decreasing, then the price will, in terms of US dollar or other fiat currencies, it will grow, in my opinion. This is reserves. So right now we're roughly over somewhere around 12 billion. We're going to be by May, we're going to be under 11 billion, and then a year later, less than 9. And you can see that this number is dropping quickly over the next few years. If you are not yet delegating and you want to find out how, the first step is to buy ADA. You have to have some ADA to delegate, and then you install the wallet. About the wallet, Daedalus wallet, the latest update requires 16 gigabytes of RAM, and probably not everyone has 16 gigabytes of RAM in their machine. I ran into this problem with several of our delegators. They tried to open their wallet and it wouldn't upgrade. It would just get stuck. If you don't have 16 gigabytes of RAM, you can upgrade, or you can switch from Daedalus to a Uroi or ADA Lite. If you run into that problem, please get in touch with me and I can help you figure out how to get past it. But you can stake through Uroi, which is a mobile light version of the wallet. You can stake through Daedalus, or you can stake through ADA Lite. So if you need these instructions, step by step how to stake, go to stakemyada.net, and we have, actually, let me show you where that is in case we have new people here. Delegated stake pool LEGA. We have instructions here for Daedalus and for Uroi. So you can click on one of them, let's say Daedalus, and then we have a step-by-step here that describes how to go to the staking process. So here, stakemyada.net, and then delegated stake pool LEGA, and then pick your wallet, let's say Uroi. And then here you can find instructions how to do it. step by step with pictures. Okay. So I've recently had some questions. How long does it take for you to get rewards? And if you switch from one wallet to another wallet, or if you install a new wallet, if you set up a new wallet and you transfer your amount to a new wallet, you start receiving rewards right away. So it takes 4 epochs, or approximately 20 days, for you to start receiving rewards, because after you, let's say this is epoch n+1, you have ADA in your wallet, which you send there. There's a snapshot. Snapshot gets taken by the blockchain, and then in the next epoch n+2, blocks are produced based on that snapshot. Your rewards are calculated in epoch n+3, so that's after day 15, and then n+4, after 20 days you get paid. So that's why it takes 20 days. And if you are moving wallets, or if you're setting up a new wallet, and you're buying additional ADA, or you're moving your ADA, my recommendation, keep the old wallet running to receive any rewards that are pending payout. Set up the new wallet and put the new ADA in the new wallet, and keep the new wallet. You don't have to keep it running. Just redelegate your ADA, send your new ADA or ADA that you want to move to the new wallet, and then redelegate from that new wallet. But keep the old one running for a few epochs, just to get any rewards that were pending for you. So if you have any issues with receiving rewards, or have additional questions of why taking 4 epochs or 20 days, please reach out to me on that as well. So this is Cardano roadmap. We are right now in the Basha era. So we're working on customizing and scaling. So this will involve releasing Hydra, which is the, I would say, high performance for Cardano blockchain. It will allow transactions to scale. So more transactions, faster transactions. So once this Basha stage is completed, then we'll go to Voltaire. Before, we just completed in September 2021 Gogan, which was the smart contracts release on Cardano. So there's more coming this year. There are some other notable developments. There are now the EVM machine is going live. The decentralized exchanges on Cardano. There are several. One is already live. We also have Sunday Swap, which everyone has been waiting for. It's a decentralized exchange on Cardano that has gone live on the testnet, but it's going live on the production network soon. So there's a lot to look forward to this year for Cardano. I think it's going to be a good year. So this is some of the ADAnomics. Like I was saying, the circulating supply, the minted percentage is growing. We're going to hit somewhere at in upwards close to 80% by the end of this year. Inflation is going down. So if you're staking now, you're receiving more rewards than you ever will. So the earlier you started to stake, the more rewards you were receiving, and then the ADA you receive, if you sell it, then you get fiat money for it or whatever you exchange it for. If you keep your ADA staked, then the ADA you have staked continues to receive rewards. So this is why the percentage of staked ADA is going up, because we have both minted and circulating supply is going up. So there's more being released, and it's not being sold, most delegators keep their ADA, and therefore both the minted and staked percentage is going up. So some other stats from ADAnomics, we like I was saying earlier, we just crossed 1,050,000 wallets. You can also see that here if you go to, it will give you stats for the whole blockchain. So this is like the load delegation. So this is how many delegated wallets there are right now. 1,052,000. Stake percentage 71.2%. So I see this has gone down a bit. This was at close to 72% earlier. So there's a lot of live stats here for different pools, and here you can also search for LEGA. You can search for our pool. You can see live stats here, delegators and live mode, what's been happening when somebody adds or removes ADA. So that's it. I only have a couple more things to note. We have a YouTube channel. It's LEGA Systems, and the LinkedIn page. I also have this in my invite. Please follow us on LinkedIn and subscribe to the YouTube channel. I have a lot of updates there, and we have a stats page on ADA pools and pool.io. So again, if you go to our website, stakemyada.net, here if you go to about staking, useful links, you can find all of these links here. And if you need to get in touch with me, you can send me an email, or you can send me a message on LinkedIn. I mostly invite through LinkedIn or our mailing list. So this is my email. It's admin@stakemyada.net. Okay, I have another question here. Please continue about the problems BTC will encounter if we don't have North American miners. Yeah, I think we will have a problem with that. That happens. Well, that person has left. So thanks to everyone who came tonight and participated in the delegators call. We'll have next one the first Thursday of in February. So Thursday, February 3rd, and I will make a video of this for those who couldn't make it, and I'll post this on our YouTube channel. And in the meantime, you're welcome. In the meantime, if you have any questions, please let me know and do reach out. And happy staking and have a good night.